Hello everyone. This is Shanti Titus with Profitable Financial Services. I hope that you're having an amazing day. Today I want to talk about a little hidden expense that a lot of people who are just new to business overlook, and they don't get to reap the benefit of it strictly because they're either unaware or either the person that is handling their books are not taking this into account. This particular expense can literally save you thousands of dollars as it pertains to your taxes, okay? So if you have a loan, a business loan, or you have a business credit card, or you have financed your vehicle in your business name, you need to have an amortization schedule for the loans, and you need to be looking at your credit card statements each and every month to get the interest expense if you're not paying your credit card off each and every month, okay? I want to show you an example of how much money some people have potentially left on the table. And if you continue to do that, it's going to be a compound effect and you're literally overpaying in taxes. 2024 is definitely about going to the next level. Over here, I also want to continue to educate you guys and to know and understand that we need to be thinking smarter. We need to be thinking ahead. We need to know what needs to be taken into account and take everything into account that is going to position us in the best possible way to minimize our tax bill and to also make sure that our company is financially healthy. Okay, so the main thing you need to understand right now, if you have a business credit card, I want you to go and I want you to pull up your bank statement or your credit card statement, and I want you to look on your credit card statement, especially if you don't pay it off every month. And I want you to look on there and see what the interest expense was for that billing cycle. I challenge you to go back in 2023 to see how much interest you've actually paid for your credit card for the year. Okay, so take some time, go ahead and pull that up now and download it and find that. And if you notice that if you don't pay that card off each and every month, that there's an amount there every month that needs to be paid, or that, you know, is a part of the minimum balance. That is an additional expense to your business. And because a lot of us don't necessarily feel it off top at the beginning, it doesn't mean that we should overlook it and neglect it. Okay. Also, if you purchase real estate in your business, for a lot of you real estate investors out there, you need to have an amortization schedule for all of the assets that you purchase, each and every one of them. And I'm going to show you an example of what I'm talking about. Okay. So let's go over here. I'm over here at bank rate mortgages. Okay. So with bank rate mortgages, this is what an amortization schedule looks like. You can also create these. If you guys would like for me to make these available as a download for you to use, I'm going to create a store so that you can have a spreadsheet that allows you to create an amortization schedule by plugging in your percentage, your interest rate, and then the length of the loan as well as the start date. Okay, that's all you need to create an amortization schedule. So in this particular instance, we're going to pretend that we have a business and we purchased a rental property with the business. So as you can see, for 2024, this particular monthly payment, I'm going to show you guys, hold on. This particular monthly payment for this is $1,826, and they round it down, so it's actually $1,826.36. Okay, the total amount of the loan was, so the loan amount was $330,000 for 30 years at 5.27 interest rate. Okay, so here's the thing. When this is all said and done and paid for, this is how much interest will be paid on this house if there isn't like a acceleration of payments on the buyer side. Okay, so they're going to pay the $330,000 plus the $327,490. So at the end of it all, they're going to end up paying $657,490, probably in some change, for a $330,000 piece of real estate. Okay, so keep that in mind. If you're not, do you see If you keep that 30 years and you're paying it for 30 years, you're not accelerating it off. This is how much that you're not writing off in interest expense. I'm going to show you a little bit more in granular detail. Okay, we're going to go down. And this is why it's important to have a bookkeeper, an accountant that understands these things, and that understands, you know, everything as it pertains to making sure your money is protected and making sure that your money, that you're, you know, that you're not just arbitrarily giving unnecessary money to the IRS. This is literally leaving money on the table, okay, if you're not doing this. So number one, get an amortization schedule if you purchase a car or a piece of real estate in your business name. Secondly, we saw that it's $1,826 per month. This is the classification for the year 2024, okay? When you make those payments, let's say we bought a house today. We don't make the payment until February the 2nd, 2024. Our first entire payment is going to be $1,826, but guess what? $1,449.25 is interest, and then this is what's going to eat down at the principal. Once again, this is interest. This is not paying the house down at all. This is pretty much the fee that the bank is, give the fee that the bank is causing us to, want us to pay. And then this is the principal that's bringing down the total amount of the balance. We bought the house for $330,000. Look at the balance after this first payment. Even though we made over $1,800 of a payment, only $377.11 is going towards the principal. So this is actually how much we have left on this particular loan. This interest expense is what should be written off. Okay. The reason why people are so upset with real estate investors is because they understand the banking system, they understand credit, and they also, for those individuals who have the right training, they understand the tax incentives on purchasing assets. Okay. Because not only do they get this interest expense, they also get depreciation expense. They get depreciation expense on the building, guys. Okay. So they're going to get this interest here. And then they may have a tenant living in there, right? So they're going to get the interest, get to write that off. And they're also going to get to write off the depreciation. They're also going to get to write off any repairs, any maintenance, any lawn care, all of that will be, and taxes are all going to be written off. And they're going to be paid for by someone else if they're renting it, okay? So anytime that you have a loan and there's interest involved, make sure that you have an amortization schedule. So I went ahead and I copied and I pasted over the details of that particular loan for the $300,000. Okay. So this is for the year coming forward, right? So let's say we purchased it on the 2nd of January, which is today. And this is February right here. Let me bring that in there. Look at this. If you don't have the right bookkeeper or accountant to ask you for your amortization schedule, that's $15,849 that actually you'll be able to reduce your revenue by that amount. Okay? Works the same way if you purchase a company car. If you finance a company vehicle, you'll be able to calculate, add up all of the interest expense on that car loan, and that's going to be your interest paid. This is going to reduce your revenue. And then that's going to, like, let's say if you only made $20,000, right, for your business, and then, but you own this property or you own a vehicle inside of there, your tax liability then becomes like less than $5,000. And you don't pay the $5,000, right? You don't pay $5,000. Pretty much you pay a percentage of the $5,000. That's how powerful this is. That's how powerful it is, to have assets in your business. When you marry tax strategy with financing, with a strategic acquisition of assets, you're going to protect your money and be on the right side of things every single time. Listen, I know that it's difficult. I know that it's hard right now for a lot of people as it pertains to just, with inflation and everything like that. But one of the things that we can do is we can start becoming more educated and elevate our level of understanding as it pertains to taxes and finances. So, once again, if you have a credit card, go and pull all your credit card statements. Look and see how much interest you have paid out each and every month. For those 12 months, add them all together. That is going to be your interest expense for 2023. If you own a property or if you own a car, all that interest for each and every month, that is going to go against your revenue. So it's going to reduce your taxable income. Do not, after 2022, we are no longer, after the 2023 tax season, going to forget our interest expense. If you have a business loan, get an amortization schedule or create one. Okay? If you have a car loan, make sure that you have the amortization schedule for that. If you have purchased real estate and you got a mortgage on that particular property, make sure that you have the interest expense there. Even if you have a hard money lender and you have to pay interest, all of that interest is pretty much deductible against how much money you made when you sell that property, guys. Okay? So, if you found this video helpful, definitely give this video a thumbs up. Share with a fellow entrepreneur who needs to know this information. And then also, if you need a consultation, click the link below. I have, a couple of spots left for next week so that we can be in the perfect position to win in 2024. Until next time, y'all stay profitable and stay great. Talk to you soon. Bye.